Good evening, traders. This is Cloud Trace with a special edition video on the dollar yen. I'm going to go through some top-down analysis starting with monthly. I feel that if you're not watching the dollar yen right now, that you probably should be. It's basically controlling everything. I'm a little bit obsessed with it, and if you disagree with me and you think that the dollar yen doesn't matter here, feel free to let me know in the comments section below or on Twitter. So starting off with the dollar yen, looking at the monthly chart, this is the bigger picture. It's quite a mess. So let me zoom in to some more recent era. So we're starting at like 2009 here. So the dollar yen was in a significant downtrend, but yet still bullish. It's been bullish since it broke out of the cloud here in 2013. You see that it tried to break out of the cloud several times. Finally, with the help of the Tenkan Sen, the blue line here, it did break out and basically managed to stay above the Tenkan Sen on a closing basis for quite a while until we got to here. That is September of 2015. We did put in a close underneath the Tenkan Sen, suggesting the potential for a change of trend to the downside. The next candle in October of 2015 closed underneath the Tenkan Sen, but put in a hammer type candle. So that was a warning that we might get another trend change to the upside, and indeed that's what happened. So we tried again, put in a pretty strong close above the Tenkan Sen in November, then back down in December. Another close slightly above the Tenkan Sen, but the Tenkan Sen has already gotten flat, suggesting sideways price action. We actually tested far below the Tenkan Sen on this hammer candle, which was in January of 2016. Then in February we sold off significantly. But we're still quite bullish. We just happened to lose the Tenkan Sen, suggesting the potential for a sustained downtrend was there. So we put in a long-legged doji type candle in March of this year, suggesting the possibility for a trend change to the upside, but we did not confirm that, and indeed we got more selling. And all the time we were still below the Tenkan Sen, heading back towards the cloud. We got a bear cross here. That's when the Kijun Sen crosses over the Tenkan Sen, so that is an even more bearish signal. And indeed what happened is after an attempt to bounce that was not did not even get to the Tenkan Sen or the Kijun Sen, we sold off more here in June. We put in a bit of a bottoming tail in June. We didn't come all the way down to the cloud, and then we just got a lot of sideways price action for a while until October and November started taking off crazy to the upside. So let me zoom in and go over the last couple of candles. So in November, we had an extremely bullish month for the dollar yen. We not only came and tested and broke through the Tenkan Sen, we came and tested back over and closed on the highs over the Kijun Sen. The Kijun Sen is flat at this point, and the Tenkan Sen is starting to tip up. That suggests there is a potential for a bullish cross, but obviously there's a lot of space between the Tenkan Sen and the Kijun Sen, so there's no indication that that's going to happen anytime soon. The new candle that just opened in December a few days ago is still remaining over the Kijun Sen support for the time being, but not really making any further progress higher. In fact, it's sort of stalling out at the same level that this long-legged doji back in March was unable to get over as well. So what's coming next for the dollar yen is a little bit hard to tell. We do have a very strong, thick rising cloud going into all the way into 2018. So if we do manage to hold the clouds support, price action is going to go up. If we do get some selling and come down, then there'll be plenty of places for along this rising cloud for the dollar yen pair to find support. So that's, quite bullish for the dollar versus the Japanese yen on the monthly time frame. So on the monthly time frame, the main level that we're keeping an eye on here is the Kijun Sen at 112.42. Let's go down to the weekly, and so far, I mean, it's hard to judge a candle that's just open. It's real tiny, but if this candle was to close now, and we were analyzing a closed candle, then it would look like a potential trend change, potential reversal candle to the downside that would need to be confirmed by a lower high and a lower low on the next candle. But that is just hearsay because that candle has just barely been open. So let's look at the weekly. If you have been following me on Twitter or paying attention to my posts in various other places, social media, chat room, etc., you'll note that I did call potential topping action when the Chikou here ran into the Kijun Sen 2 weeks ago, and I will show you what that looks like. I will attempt to find the drawing. There we go. So this is exactly the level where the Chikou came into the Kijun Sen and was unable to get higher, which shows you that we did indeed find resistance at that level, and we are still currently finding resistance at that level for the time being. If we zoom in, last week's candle does look like a bit of a spinning top type long-legged doji again. So there is the potential for a trend change to the downside here. We would need to see a lower high and a lower low. So far, the high on last week's candle was 114.81, and this week's candle is 114.77. So still just a few ticks lower than the prior high. So that's significant to keep an eye on. We are firmly off the highs, but there's no guarantee that we will not retest them. As far as cloud analysis, since we've closed inside the cloud here on the weekly time frame a couple weeks ago, the weekly trend went from being bearish as price action was under the cloud to being neutral. Anytime price action is inside the cloud, it's considered to be neutral in Ichimoku terms. So I can't really analyze this week's candle because it's still forming, but it's still neutral inside the cloud, and it can go, let me show you, it can go all the way up to the top of the cloud here at 115.41 before it finds resistance other than the Chikou at Kijun Sen resistance that I previously pointed out. And if we do find selling, it has significant support at the bottom of the cloud here, which is at 111.63. So if we do find selling, keep an eye on that level as we head down towards it. If we do lose that level of support, we could potentially look at testing the flat Tenkan Sen below. Whenever there's a flat Tenkan Sen below price, it suggests the potential for the price being attracted to it. In Ichimoku, flats suggest equilibrium, and mean reversion is potentially possible. This works better the closer you are to the flat. Note that the bottom of the cloud here is flat as well. The shape of the cloud itself is traveling lower, and the actual top of the cloud is lower going into the end of the year. Also, though, the support of the cloud is also lower. So as we head into the end of the year, as we head into like next week and the week after, we have all sorts of support in here available for dollar yen to find support at. The shape of the cloud itself is very rectangular and sideways, especially in the first month or so, suggesting potential range trade inside the cloud if we do continue to stay inside the cloud. The cloud becomes thicker throughout the first half of the year, which provides more support for the dollar yen should it sell lower, sell down. As we go into February, support is down at 105, thereabouts. It continues to be around the 105 level, and then support goes all the way down to 103.60 as we head into March, the end of March. The Tenkan-sen, if we do maintain inside the cloud, price action it maintains inside the cloud, the Tenkan-sen could tip up and provide higher and higher support even once we move into this area of time. So we could get a pullback to the Tenkan-sen and then maintain support at the Tenkan-sen. That's a possibility also. Let's go to some shorter time frames. Oh, and I might as well point out here that the reason that I'm so interested in whether or not the dollar-yen pair is putting in a topping pattern or not here is basically commodities such as gold and silver are really not going to be able to get any traction unless the dollar-yen chills out and sells off. I'm not talking about massive sell-off necessarily, but it really needs to maintain under the current levels that it's at. And there has been a pretty significant inverse correlation, in fact, tick-by-tick inverse correlation with both gold and silver and treasuries, and probably a lot of other commodities that I don't happen to watch. So let's move on to some shorter time frames. Let's look at the daily. And I'll just hide my drawing again so it doesn't confuse us. So on the daily time frame, this is an interesting pattern. I like to call this pattern a pullback to breakout pattern. And what designates a pullback to breakout pattern by my definition in an Ichimoku on an Ichimoku chart is an existing uptrend and a pullback. The pullback, as long as it holds the Tenkan-sen, and oftentimes tags the Tenkan-sen, and then the Tenkan-sen oftentimes is pointing up, that is a good sign that we're going to have a breakout to new highs. And that's exactly what happened in this pattern. We came up, we got to an overbought condition. We actually got overbought way over here, but we were still significantly above the Tenkan-sen. We sort of tried to flatten out a little bit here. Then we got even more overbought here. You can see on the RSI down there below. And then, we did sell off. We tried to tag the Tenkan-sen. We moved sideways a little bit, put in some tweezer bottoms on these two daily candles, and then broke out to the upside. That was on 11:30, so last Wednesday. So far since that happened, we are basically putting in yet another pullback to breakout type pattern. We're still overbought, although less overbought. But we did come down, and this candle here, yesterday's candle, did come down and test the Tenkan-sen and then close higher. It did not make a new high, which is fortunate if you are trading gold. So far the new candle is just opening up here, but there is a potential for a pullback to breakout pattern still at this point. We'll see if we get another potential test of the Tenkan-sen, what happens. If you want to be long gold and silver or other commodities, or also treasuries, you want to see the dollar-yen pair lose. Also, if you're in an American business, you want to see the dollar-yen pair lose the Tenkan-sen support, which is currently at 113.08. That would be key to initiate the potential for a pullback greater than just a small pullback that corresponds with the pattern I just described. We do have a flat Kijun-sen down here below, which suggests that we do kind of need a pullback because we're quite extended over the cloud, but that's unlikely as long as we hold the Tenkan-sen support. If we do find some selling, but not all the way down to the Tenkan-sen, it's possible next week that the Tenkan-sen will get flatter. We could be working off this overbought condition. In fact, it looks like that we have been working off this overbought condition, and that's about it for the analysis there. As far as the cloud goes, obviously this chart is fully bullish in Ichimoku terms. It's above all the indicators. As far as the cloud goes, we do have a rising cloud, but it's pretty thin. we don't really have to think about it until we get near it, and we're so far away from it that we don't have to really think about the cloud as far as acting as support. We do have a rising, also thin cloud going all the way into the end of 2016 and the beginning of 2017. It's becoming thicker and thicker. So if we do get a significant pullback, even if we pull back all the way to the Kijun Sen or maybe even all the way to the cloud, then we still have cloud support going forward. So there's still potential for a continued bullish activity from the dollar yen. If we were to get a significant pullback all the way to the cloud, there are a few areas where the cloud would be less supportive. This area where the little notches are, the cloud is quite thin there, so those are areas that there could be possibly potential for a break lower through the cloud. But that is just so far out of our reality at the moment. I'm not even going to think about it or talk to you about it. So let's go down to even shorter time frame. Let's look at the 4-hour chart. 4-hour chart, you see a very steep uptrend once again. And currently, let me zoom in a little bit more. Currently, we are the last 4-hour candle closed slightly, just a hair above the Tenkan Sen. It looks like the new candle is going to potentially violate the Tenkan Sen and perhaps trade in a range between the Tenkan Sen and the Kijun Sen. Let me zoom that in. That's kind of what today's candle did, even though it closed above the Tenkan Sen and tested significantly below the Tenkan Sen. We had some volatile action this morning due to the Italy and Austrian news out of Europe. So if we do continue to sell into this evening into the Asia Open, do look for potential for support down here at 113.43 on the 4-hour time frame. If you are looking to short the dollar yen pair here or potentially get long commodities such as gold or silver. Let's go down to the hourly time frame. Hourly time frame, we are stuck inside the cloud, so neutral in Ichimoku terms, and it does look like we're putting in a sort of a rounded top here so far. This hourly candle is currently between the Kijun Sen and the cloud. The cloud is headed lower. The shape of the cloud is headed lower, so there's a suggestion that we might follow the shape of the cloud lower for the next several hours, unless we do get back above the Kijun Sen, in which case in a few hours then we're going to have to be looking at the potential resistance at the top of the cloud here at 113.84. And that might be a good level to keep on your map if you are hoping to stay long commodities or treasuries, anything else that trades inversely to the dollar yen. I might as well I'll look at the 30-minute just quickly, but 30-minute chart is, however, bullish, and it is now testing the cloud. The cloud could offer support to this pair, and we could see higher prices and a retest of the Kijun Sen at 113.96. If we do find more selling, we will have to lose the support of the cloud, and the next obvious support would be at the Tenkan Sen down below at 113.67. If we lose the support of the Tenkan Sen, it's likely that we will lose the support of the cloud as well down at 113.65. So keep an eye on those levels as well. And that's about it for the dollar yen. I will geez, it's been a long day. I will let you take a peek at the gold chart just for the fun of it. So, because gold's in a very interesting place on the weekly time frame as well. Gold actually traded and is currently underneath the weekly cloud here. It's really important on a closing basis if you want to be long gold for gold to get back over the weekly cloud bottom at 1175.70 and continue to maintain inside the cloud as the cloud support is rising here. If price action can maintain inside the cloud, then it will be rising. Otherwise, gold does not have a lot of support on the weekly time frame. But if we use the handy Chikou, this red line here representing price time shifted 26 periods into the past, we can see that the Chikou, if we do get some selling, will come down and find support at the cloud at approximately, let's say, 1120. That is an area where gold could find support if we do lose, find significant more selling on gold. So just keep that level in mind. Also, if we do, get a lot more selling, a lot more price action lower on gold. Thank you for watching. I hope that was helpful. If you're interested in learning more about Ichimoku, do hit me up on Twitter or check out my website at cloudchartist.com. And please, if you have any questions, feel free to ask in the comment section on YouTube. And if you want to be notified when I release new videos, do subscribe to my channel. Thanks again. Have a good night.